Hello guys, so today we're going to be solving the November 2020 IB Business Management past paper. So we're going to be doing section A. So what we're going to be doing is we're gonna solve this part of section A, like question 1, and we're gonna solve question 2 in part 2. I think question 1 is incredibly easier than question 2, but let us begin. So our case is actually called Jill's Jeans, right? So Jill created Jill's Jeans, which operates as a sole trader. This is a keyword in our syllabus. It's in section 1.2. I think I'm just going to tell you guys the section so you can review later. Maybe it's easier for you. Makes custom jeans. So this is actually in 5.2. So this is like the types of production. 5.2. Jill designs all the jeans and sells them online in local markets. Because of increasing demand in 2020, JJ has benefited from economies of scale. So this is also in our syllabus section 1.5. Okay. So now we have our budget and actual figures. Always remember that when we have actual and budgeted figures, this means that we have a variance analysis deal. Now we have to do your first question. State 2 features of a sole trader. So I basically want to just explain what a sole trader is to you guys. So basically a sole trader is a business operated and owned by one person. So like that one person operates the business. So there's no legal distinction between the business and the owner. So no legal distinction. So if the owner dies, the business will cease to exist, and they have unlimited, these are keywords in the IB syllabus. Unlimited liability, meaning that if the business goes broke and it basically has like loans to pay and debts to pay and it's unable to do so, then the sole trader's assets will be seized in order to pay for the loans. Okay, and that's it basically. So we explained everything for the sole trader. So there's no, like, they're the same thing. The business and the owner are the same thing once the entity is a sole trader. So now they give us the action verb state. So state is basically you just have to give them the answer to their question. You don't have to justify your answer, you just have to give them the answers. So now by literally just simply breaking down this, we directly and automatically are able to do so. So let us begin. So the first thing I would basically say is that there is no legal distinction between the business and the owner. If the owner dies, the business will cease to exist. Okay. And then the second one would be that the business is it's easier, cheaper, and faster to set up due to the, let's say, the lack of legal formalities when setting up the business. Okay, guys, I think these answers are really good, and I'll explain why they're really good. So first and foremost, in IB business management, in any IB exam, so no matter what subject you're taking, when the examiner is actually correcting your paper, they need to follow something called a mark scheme. If you don't know what that is, basically set of answers. So here, what you did is that you use business management terminology, so cease to exist, no legal distinction. So here you used the business management terminology, and you didn't have to explain, but you kind of explained just to make sure that your characteristic is relevant, or the feature you used is relevant. So you can really talk about that. You can also say they are one entity as well, so you can also add that when explaining. So this actually makes sure that you cross all the possible answers in the mark scheme. And then the business is easy, cheaper, and faster. So here you like use so many features to set up. And you talked about the lack of legal formalities, and not only did you talk about the lack of legal formalities, but also you proceeded by saying when setting up the business, so you understand what a lack of legal formalities means, okay? So here you actually showed your examiner that you actually know what's happening, right? So this is it for this question. You don't really have to do more. This is a two-pointer question. It's just state. But again, I think that it is necessary to have, better answers. So using information in table 1 for JJ, prepare a profit and loss account for the budgeted and actual figures. Okay, perfect. So you have to first like draw your box. Draw a really huge box. I don't think you have to draw something that large. So we have 1, 2, 3, and then we have even more than that. We have to do even like we're gonna have 5 rows, I'm guessing. Yeah, 5 rows. Okay, so we're gonna have okay, I think that's it. I think it actually has to be this large, because I like them to be neat and for the students to see, for you guys to see. So I'm just drawing this in front of you guys. I know it's annoying, but I think it's better if you guys actually see what's really happening. And like you should actually strategically do this, just because you need to save time during your exams. It's really necessary to do so. You have to be really strategic about your time. So we're going to just begin by, because guys, later, like the second question in part B says a variance analysis, so we have to add a column for variance. Okay, so just keep that in mind. So I'm just gonna like do split this. Okay. Then we have to do this one, this one, this one, and one more. So we have to split by 4. Okay, so we technically have to get like each one 4, I'm guessing, yeah. I think this is best. Let's just do this one here. Perfect, okay. So it's not completely even, but it's fine. They don't require you to be this neat in IB business management. I honestly think it's totally fine if you're not like that neat. But anyways, here you have to do budgeted figures and in dollars, actual figures, dollars, and variance. Always remember to have the currency written down, right? It's very, very, very important. And then you also have to continue, but don't follow this order because this is wrong, okay? Don't follow the order that they have put for you. This is wrong. You have to actually follow the order of the profit and loss. So you start off with sales, revenue. If you want me to explain, I'm going to just explain just a bit. Then cost of goods sold. Then we actually have gross profit because now I'm going to explain. Just gonna like take a moment and explain that gross profit is basically sales revenue minus cost of goods sold. Okay, sorry I had to use the acronym, but it's just quite faster. So keep that in mind. And then we have expenses, and then profit before interest and tax. Okay, so this is how you actually have to really draw it, okay? And now we have to begin. So I wrote you down the formula, guys. So here we have 3,000. Okay, guys, so we have 3,000. And then for cost of goods sold, we have 1,000. Then for gross profit, we have 3,000 minus 1,000. What's your answer, guys? So we have to subtract these by one another. We have 2,000. Then we have expenses is oh guys, you see what happened? This confused me. So sales revenue actually is 5,000. Then you have cost of goods sold 3,000. So what's your gross profit? Your gross profit is 2,000, guys. Okay, sorry, you see the numbers flipped me. So you remember, you have to look at them properly, guys. Expenses is 1,000. So now you have 1,000 as your full number. Why? Because like profit before interest and tax is actually gross profit minus expenses, okay? So this is like, these are our formulas. This is how we actually get to where we get. But then for the actual, it's different. So for the actual figures, our sales revenue is actually 4,000. We're gonna actually like answer the variance later. So we're just gonna like follow the question step by step. Then we have cost of goods sold 2,500. Okay, so this is less than 3,000. Keep that in mind. Then we have gross profit. In this case, 4,000 minus 2,500, that's 1,500. Then we have expenses. In this case, it's 800. Then our final profit before interest and tax is 700 if we subtract 1,500 by 800. So keep in mind, it's better to like keep the zeros aligned if you get what I mean. So now we finished our profit and loss. We did everything, but guys, be careful because this is kind of confusing. Even if you notice the trick, but when you're looking, just keep your eyes peeled. Very important, IB business management, especially. So variance. Variance is basically, in this case, you have to just check the difference. So I don't know if you guys know or if you have revised this topic, but we have in variance something called adverse, and you have a variance. I've done this several times in my channel actually. So adverse is basically negative for the business, and adverse and favorable, sorry. And adverse, negative for the business, favorable is positive for the business, right? So I'm gonna make them in other colors. So this is, let's say, I'm just gonna keep the same color, and then this is, okay, this is positive for the business, and this is negative for the business, right? Just keep that in mind. Adverse is something that helps the business. Favorable, sorry. Adverse is something that's negative for the business. Favorable is something that's good for the business, okay? Keep that in mind. So now, let's begin. So sales revenue. So basically, 5,000 is greater than 4,000. This is something bad for the business. So the difference is 1,000. So first we have to just see the difference. What's the difference? The difference is 1,000. But this is something that's actually adverse for the business. Adverse. Why is it adverse? Because the business made less profit than less sales revenue than expected. So this is gonna lead to less profit. So sales revenue, I'm actually gonna use another color. So sales revenue, guys, it's basically price times quantity. So this means that the business ended up selling a smaller quantity. So there was a decrease in the expected quantity to be sold. Okay, so this means that the business sold less than it's expected. In this case, Jill's jeans sold less jeans than it actually expected to sell. So this is something negative for Jill's jeans, right? Because they actually sold $1,000 less of pairs of jeans than they actually expected to sell. So this is something adverse, something negative for the business. This is something that's gonna harm it because it's gonna actually on the like long term, it's gonna decrease its cost, its gross profit, because again, gross profit is basically sales revenue minus cost of goods sold, right? So now let us look at the cost of goods sold. So cost of goods sold again is also decreased. It's 500. But however, this is something good for the business. This is something favorable for the business. Why something favorable? Because the business had less costs, because costs take away from the profit of the business. So this is something good for the business, right? So this is something good because cost of goods sold actually, like the higher it is, the less the gross profit is, but the lower it is, the more the gross profit is. So this is something good. And again, just to explain the logic and the nuances behind everything, it's actually natural for the cost of goods to be sold because they did sell less jeans, they did produce less. So it's actually natural for the cost of goods to be sold to be less, right? So now the gross profit is 500 less than what they anticipated. So this is adverse. This is something bad for the business because they're gonna make less profit than they wanted to. Like negatively affects the business. So yeah, 200 is the difference for expenses. This is favorable. Why? Because the business end up paying less for expenses, so it has more for its profit before interest and tax. And we can see that from its from the formula of profit before interest and tax. So this is something good for the business, but again, it's also normal for the expenses to be less because they basically sold less. Not technically, this is more for cost of goods sold, but basically something good for the business, right? So now let's go for profit before interest and tax. The difference is 300. This is adverse because they did not, because JJ made less profit than it expected to make. So yeah. Now, so this is 1 and 2 basically. I just did them in one table. And now for question C. The question asks, explain one possible economy of scale from which JJ has benefited. So we have the keyword economies of scale, right? So I actually want to explain what economies of scale are. Okay, so economies of scale are basically the decrease in per unit production cost as output or activity increases. So now I'm going to explain. So this means that let's say JJ produces 2,000 genes, right? When it begins producing, let's say 6,000, the cost per gene, per production of genes is going to decrease. Why? Because it's basically the cost of each like raw material is going to decrease because they're going to be buying more. They can even make a deal with their supplier because now that they're going to be giving the suppliers very high payments because they're going to be producing a lot, then each gene is going to decrease. They're going to begin getting discounts. Okay. So now we're going to talk about how JJ has benefited, right? So we can just talk about how when JJ begins purchasing at high rates, the unit, the cost of each unit of genes produced will decrease since JJ will be bulk buying her raw material such as like I don't know, like the such as fabrics, okay, fabrics. And basically that's it. I don't think we have to do more because this is a 2 mark and we're still in like section A. So this is it, guys. Sorry if I like confused you a bit, but I was a bit like startled. But this is really it. Thank you so much for watching. Just remember that you need to know all your different business entities in section 1.2 and your definitions in general. And for the budgeted and actual and variance, make sure that for the variance, adverse is bad for the business. Favorable is good for the business, and this is just like from the words, but just make sure that you calculate the difference. You make sure that you don't get confused with the data they give you. Keep your eyes peeled for everything. Thank you so much, guys, for watching. Probably do part 2 soon. If you have any questions, comment down below, and if you want me to explain any specific past papers, please let me know. Bye bye, guys. Enjoy your day. Thank you for watching. Please subscribe and like, and if you want any private tutoring, then comment down below, or you can find my email and you can contact me, and as well you can join my Google Classroom for all the IB business management notes and resources. And if you want me to make a video for top 10 IB tips for your exams and for starting IB, then please comment down below. Thank you guys for watching. Bye bye.